This is inflation-adjusted CRB. Evy, your family has lived this chart. Is there the technology innovation to benefit the mining industry, or is technology going to be the enemy of price as it's been for 6 decades?
Yeah, it's a really great question. I can remember a time at the end of the 1990s when the former leader of one of the larger mining companies was retiring, and he told me that he thought that we were going into a period where we would see an end to the real price decline of commodities because of the lack of investment and the changes in the demand landscape. And I think your chart there, Tom, shows that very, very clearly. And we went into obviously that demand-led increase. Coming back to the question specifically on technology, we've been doing quite a lot of work on this recently, and I think one of the areas that's really exciting across the space is automation, where we are seeing significant changes in the cost profile of some companies. Also, the risks to margins from labor price inflation will obviously be lower with that automation coming through. And I think the area for the future in technology, which is one that we have great hopes for, is to increase the effectiveness and efficiency of exploration. We're now seeing the ability to analyze data much more powerfully. We're also able to target exploration expenditure much more effectively by narrowing down the probabilities of success or loss, I suppose. And I think that's an area that we think technology will have a big impact on the resources space by making deposits that were uneconomic and finding ones that were thought to be uneconomic and bringing them forward for development.
Evy, I want to run this video again. This is Francine's gold mine out in Australia. And what's so important here, Evy, is I was playing with Tonka toys that looked like that truck. You were living it at 17 years old, hanging out in Australian mines. What can you tell us about the real world of mining that we in our fancy suits don't see? What's the #1 message you have about the reality of digging stuff out of the ground?
I think it's hard work. That's the first point. And the second point is that these are investments which take many, many years to bear returns for investors. I think in a market today that is so driven by short-term price moves, we see investors focused on the day-by-day or second-by-second moves in some commodities and think that will have a dramatic impact on the valuation of some businesses. These are companies today that are deploying capital where they expect to get returns over many years into the future. And I think the mismatch between the short-termism in the market right now and the investment decisions that have to be taken by executives at these companies presents opportunities for groups like us to exploit the kind of arbitrage in that gap. And that's what I've been doing for 25 years and hopefully have done an okay job.
Evy, how much lack of investment is there? And does it actually hit a specific commodity or a specific part of the world?
Yeah, it's a good question. So what we're seeing now across the resources space is restraint. We've seen this huge amount of capital invested during the last decade, which created this wall of supply that arose. It started to arrive in 2012 into a market that was seeing reduced rates of demand growth. And that's what caused prices to retreat to the lows of 2015, early 2016. What we're still in now is the kind of hangover period where investors are still cautious about giving capital to companies to allocate into investment because they don't trust that the robustness of the process is going to deliver a return. And I think this part of the cycle is going to last a decent amount of time. We're 2 years from the low. We're 6 years from the peak of capital investment spending. I think we still have another couple of years ahead of us where we're going to see low levels of reinvestment, and that's going to be very beneficial for shareholders because we're going to be able to participate in the cash flows. And I'm really looking forward to get the dividend growth and the share buybacks and the capital discipline and hopefully a re-rating in some of these equities that are just trading at crazily low multiples right now.
I have about 10 other questions, but there's a viewer question that I want to ask you. And this person wrote in saying, what is your outlook for silver for 2018? And actually, what is your preferred silver equity play?
Yeah, so we always get questions from investors about specific niche areas. and often we're asked for price forecasts or particular companies, and sadly we can't give any company names out. We're not allowed to do that. But with regards to the outlook for silver, silver is a commodity that has gone through a huge change. I remember starting this job, and everything around silver was about photography, and that was the biggest source of demand. Today, it's everybody's got a camera on their phone. They don't go to a chemist and getting their photographs developed. So there's been a big change. Silver today is driven by a whole variety of industrial applications. So strong global growth should be good for silver demand.